And we're back to another video. Let's see what happened. So yesterday we mentioned that almost $25 billion of options are expiring. And I mentioned that we are most likely going to go to this thing called the pain price, which is in between the puts and the calls. I'm going to discuss it, how it works, but basically it didn't happen, okay? I expected that we might have some volatility today and that the price is going to go towards this price where most traders lose money, but it did not happen. So why did it not happen? Well, the main reason is that most of the options were rolled over, right? Meaning that people did not get to the point where they make money, and these options, they then paid a bit of extra for these options to be rolled over to next year and for them to exercise them next year. Quickly, let me show that before I explain quickly again what options are. So this is the chart, and it basically has the date on the x-axis. So it shows us now that most options are here in January 2026. That's what it means, right? 2026, January 30th. And then many institutions also rolled over the options to March, end of March 2026, which means we have not seen that volatility in the market right now, but we might see it then next year as these options come to expire. Eventually the options will have to expire, and usually the max pain price is the price where we go towards. Now let me quickly explain again what options are. If you want, skip this quickly, but let's explain it. I think it's useful to know. So let's assume today Bitcoin is 88,000, right? Bitcoin is around 88,000 right now, and I have the right but not the obligation to buy or sell Bitcoin at a predetermined price in the future. So if I want to buy Bitcoin at a certain price in the future, then this is called a call option. So let's say I say I want to buy Bitcoin at $100,000 in the future. This is the strike price, okay? So in order for me to want to buy it, I hope that Bitcoin at the future time will be more than $100,000. Let's say it is 110,000 in our example, but I can still buy it for 100,000. So this basically means I can buy it for $10,000 cheaper than it actually is. And this leaves me with a $10,000 profit, right? But of course, in order for me to be able to do this, I need to pay a fee, which is the premium. And the premium is $2,000 in this case. So let's assume the Bitcoin then becomes 110,000. I can then buy Bitcoin for 100,000, but I have to pay my premium of 2,000, leaving me with a profit of $8,000. Now, I want to quickly explain how the premium works. Actually, let me show you the example of the put quickly. So for the put, so the call is basically for buying, and the put is for selling, right? So if I want to buy a put option, it means that I think Bitcoin will go down, right? I'm bearish on Bitcoin. So let's say I say, okay, I want to sell Bitcoin at 90,000. For me to make a profit in the future, Bitcoin has to be below 90,000, right? Let's say, for example, Bitcoin reaches 85,000 on the expiry of the option. Now I can still sell it for 90,000, even though Bitcoin is at 85,000. And that's $5,000 that I can sell above market. But again, I need to pay a premium, which is $2,000. So this leaves me with a profit of 5,000 minus 2,000, $3,000 of profit. And that's essentially exactly how options work, right? With calls and puts. And the max pain price is the price at which most traders lose money. So the most people, if you combine all the calls and the puts, so all people that are bullish and bearish, if you combine all of this, the price at which most people lose money is the max pain price, which in this case was $96,000. And usually we always go to that price. Now, let me quickly show you how the premium changes, okay? And I go quickly into the technicals in case I think this is quite useful to know. So the more likely something is going to happen, the higher the premium, right? Let's say Bitcoin is at $88,000 right now, and I say, okay, I want to buy Bitcoin at 100,000, meaning I need Bitcoin to go above 100,000 to make a profit. That's quite far away. 88 to 100 is, let's say, quite far away. And Bitcoin needs to be above 100 for me to make a profit. But if I say, okay, I want to be able to buy Bitcoin at 95,000, so Bitcoin only needs to be above 95,000 for me to make a profit, That's more realistic, right? It's closer to 88,000. And therefore the premium I pay here is $3,000 instead of 2,000 in our example. And that's quickly an explanation of these puts and calls of options. And as we can see, most traders, because these the levels have not been reached, so for most of the traders, let me show you here, the average, the blue lines here are the calls, so people are bullish. Most of them are clustered around 100,000, you can see here on the bottom, to around 120,000. So for them to make a profit, the price needs to be above 100 or 120,000. And then they can buy it at 100 at the cheaper price, but between 100 and 120,000. But the price did not reach there. So most traders, they just decided, okay, let's extend it a bit, let's roll it over. And that's what we can see here. They were rolled over until end of January, February 2026. So they're hoping that by that time, Bitcoin will be above 110,000 and they can then buy Bitcoin for that price. For the calls, so for the puts, most of them are clustered around, you can see like 86,000, 86, 85,000. So also the price did not go there. And these were also rolled over. And the max pain price you can see here is right in the middle of these two. That's the price where most people lose money. And I think that explained these two things very nicely. Now let's go into Bitcoin in the technicals. So one thing I want to show where I think we might be going to is this 200 moving average, okay? So it's this line here, the blue line. And why do I think we might retest this? So I think we might retest this line before then going down further, as we're in a bear market right now. But why do we potentially retest this line? Well, let's go back in time to the last bear cycle, right? To the last bull run. So the last time we had in our bull run in 2022, this was the peak of the last bull market, and we went down, and then we retested the same line. It's the 200 simple moving average, and we retested it right here before we then decided to go much lower, right? We retested it and then we went down. And the same thing, I can almost guarantee, I mean, I cannot guarantee, but I think from what I can see is going to happen right now, right? We're going down, we might retest this line, which is around about $106,000, $107,000 per Bitcoin, and then we go further down. I think that will happen. And I will show you again in the bull market before this, actually. This is the bull market in 2018, so the second bull cycle. Again, we went down and then we retested the 200 moving average before we continued going further down. And therefore, that is a price target I can see as realistic. Retesting this 200 moving average, which is around about $107,000 at the moment. So that's the first thing I wanted to discuss. Then let's look at the 50 moving average. So I'm gonna just change this number to 50 right here. And I know the video is a bit longer than usually, but we're gonna go on the weekly here. And if you have the 50 moving average, right, this is a less volatile moving average. It's more spaced out. So it's obviously more volatile. So we have the 50 moving average here. And what I want to show is that whenever we go below this 50 moving average, you're pretty much entering a bear market, right? So here, this was the last cycle, we went below it, we started going into the bear market, below here. Now we are going below it, same thing happens in my opinion. And the time before that also, the moment we broke below the 50 moving average, we had a continuous downward price movement. And the 50 moving average actually aligns with the EMA ribbons, which is also around about the point where the EMA ribbons flip, which is where we're going below the 50 moving average. Now, that's the second thing I wanted to discuss. Now, another thing to discuss is where I think I discussed it before, where how do we know where's the next top and where's the bottom? We're gonna put out our halving cycles here. And when we have the halving cycles, we can calculate how many days from the top to the bottom. Okay? Actually, we don't really need this. I can just show you guys like this. So let me remove these drawings, and then we're gonna calculate how many days from the bottom to the top and from the top to the bottom of each bull market and bear market, and then we can know, we can predict where we're gonna bottom out and where we should start buying Bitcoin. So we're gonna go here, firstly to this cycle, right? We are at the top here, and going to the bottom from the top is around about 365 days. You can see the number here. So keep this number in mind, 365 days. Now we're gonna do the same thing the second time. We're at the top around here, and the bottom was here, right? At this line. Also 365 days. Now let's assume the same thing happening, and I mentioned this like 2 videos ago. We start here from the top, 365 days, should be around about here. You can see September, October 2026, because the peak in price was around there, right? So around September 2026, I think we are gonna bottom out, and this could look something like this, right? And you can see a lot of consolidation right here around this range. So I wouldn't be surprised if we bottom out around about between 50 to 60,000. If you're gonna bottom out around there, maybe 65,000. I definitely don't think we're gonna go that much lower, as the bear markets usually only last 1 year. Now, how long from the bottom to the top? Well, let's see. From here, from the bottom to the top, it's been around about 1,000. You can see here 1,065 days, right? From the bottom to the top. Keep this number in mind. Let's go to the last time. Let's see, where's the bottom? The bottom is here. The top was here, double top. So we have the second top right here, 1,065 days again. Meaning, when will be the next, when will be the next top? So firstly, we said that we have 365 days from here, right? 365 days, which will be around about, September, October. Let's go here, September, October 2026. And if we go from here, from October, 1,065 days, we said, right? You can see the number of days, 1,065. So around about, again, September 2029 will be the next top of the next bull market. So what do I think will happen next, right? Let's look into it. And what we can do, the last thing I want to show you guys, is the volume profile. And the volume profile, we're gonna simply look at it here. Let's look at it from the daily actually. Let's reset our charts and show you guys what I think could happen here. So let's delete these. And the volume profile just shows us at what price is most of the volume happening. And we can see, if I zoom out a bit, actually, let me go to the weekly. I think it's a bit easier to see on the weekly. So if I go to the weekly here and have the volume profile open. One sec, here we go. Bear with me 1 second. So here we go, okay? What we can see here, this is showing us the volumes, okay? Where the lines go very far outwards, we have the most volume, the most trading happening. And obviously this is at the price point where we have consolidation, right? For a long period of time, Bitcoin has been trading sideways and volume has been building up over time. But then we saw Bitcoin go up very quickly. So there was not much volume in this range. So in this range here, I know I'm just drawing these lines right now by hand, but in this range, there's not much volume, meaning if Bitcoin goes into that range, it's very likely that we're gonna fill the range rather quickly. So the range is actually at the very bottom here. And let me remove these drawings to make it easier. We saw where the range is. If we break below here, we're gonna go down very quickly. There's not much volume support. But once we are again below this line, most likely Bitcoin will trade. Now, where is that line where we're gonna most likely reach, right? Where is that support? Well, it's around about the same price point where we were ranging last time. And you can see most of the volume is here. This is the peak, the tip, around $65,000 per Bitcoin. And I think we can be going there between around about $70,000 to $60,000 per Bitcoin That is the range where I think we're gonna be going to. But before that, I think, like I said, we're gonna retouch the 200 moving average, then go back down. So probably go up to the 200 simple moving average around 106,000, and then go down to break this area without support, and then reach the new support area of around about $70,000 to $60,000 per Bitcoin. Hopefully you liked the video. It's a bit longer, but see you guys next time. Adios.